Hi, this is Donjo Franklin with Franklin Global Capital, and I'm going to bring you the latest market analysis. All right, and given that today is May 27th, 2013, it is a bank holiday for the United States. Currently, it is 9:54 a.m. Eastern Standard Time. The markets are open, but there's not much trading activity. It's probably pretty light volume due to the holiday. So, what I wanted to do is I kind of wanted to recap what happened last week and kind of set the tone for what could possibly happen the rest of this week with the economic calendar and what things kind of look like right now from a technical standpoint. So what I have in front of you right now is a euro dollar, pound dollar, 60-minute NinjaTrader chart. The green and black candlesticks represent the euro dollar, and the pound dollar is represented by the black line on close. Right here in panel 1, what I have in panel 2 is the Franklin Volatility Index, and so looking at what happened to finish off the week, for the most part, it appears that the euro dollar and the pound dollar kind of was on a seesaw ride. It went, back and forth against each other, and we did get a long extension signal here, which called for going long on the euro dollar and short on the pound dollar. And as you can see, for the most part, that's what happened. The euro appreciated against the dollar, while the pound, it didn't fully depreciate against the dollar, but it kind of stayed flat. So this resulted in a profitable trade. And then on May 21st last week, we did get a sell signal here on the volatility index, and the volatility index sell signals basically means to short the primary pair and to go long on a secondary pair. And it started off that way, but then as we headed into the May 22nd trading session, it looks like retail sales came out for Great Britain at about 4:30 a.m. Eastern Standard Time. So right when this trade was in positive territory, retail sales came out right around this point, and then we quickly got a reversal on this trade, and things started to move out of statistical alignment. So this trade, we are currently still in this trade because, as you can see about volatility index, right around this point, we almost went back into an extreme sell area. And actually, I'm going to bring up a euro pound chart for you, and because looking at the spread trade, essentially all we're doing is we're creating a synthetic currency pair, and in that case, the synthetic currency pair is the euro pound. Now, on the euro pound itself, using the volatility index measured against itself statistically, we can see that we did get that signal on May 21st, right here. We got that short signal, and then we got the reversal. Now, on the actual euro pound chart itself, we did generate another signal. And the reason why sometimes, these signals are not simultaneous with each other between the synthetic pair and the actual cross pair is simply because we are measuring what's happening statistically between two currency pairs, and you have these issues with spread and different pricing and things not triggering at exactly the same time, but statistically and mathematically, these trades are, nearly identical. They're supposed to be, because you are trading a synthetic of the actual cross. So, as you can see, this trade, if we got in this trade on May 21st, right here, retail sales for Great Britain came out. They were much worse than expected. They fell negative 1.3%. The market was looking for basically flat 0%. So the euro appreciated rapidly against the pound. That's, we have fundamental factors that take over, and now the market is looking for its next correction point, and it triggered the exact same day, and currently we are still in this trade. Now this trade is profitable, but it's barely profitable. And as we head into this current trading week, what we're looking for is the market to realign itself and correct itself, and this trade should, we're hoping that it continues to materialize. Now, what we're looking at here is, let's bring up some support and resistance. Now, it looks like we have an old resistance point right around here, and then it looks like we have some support generating right here. And then we have some resistance right around here. So this is currently what we're dealing with. We're dealing with the market is still somewhat confused between the euro and the pound. So this week we have some key economic news coming out from the U.S. It looks like we had the preliminary GDP quarter over quarter, and then we have some major economic news coming out of Europe. We have the Spanish 10-year bond auction sales going on, and we also have consumer confidence for the U.S. So, and then we also have the GDP month over month for Canada. So we do have some somewhat major economic news coming out, as the market still looks uncertain in which direction that it wants to go between the euro and the pound. So going back to the actual spread trade, the synthetic view of this, and as you can see, this point right here, it looks like it wants to go extreme, and it's the exact same point that I showed you on the euro pound cross pair itself. And so we're still in this trade here, and this is not, let me see here, this is not the first time that we've had this situation where it triggers an extreme short, and then, or an extreme long if we're on the other side, and then it kind of pulls back and then triggers another one. So typically, as I've mentioned in previous videos, that it's a rare occurrence for that to keep generating extreme signals, especially more than two in a row, before it wants to move to the other side of that trade. So going backwards here, the last, it's kind of looking at these signals to kind of see what's happened with the markets. And, this signal was good. We got a long signal, go long on the euro, short on the pound. So that was a good signal. The signal prior to that, short on the euro, long on the pound. Again, that was a good signal. And let's go back. So for the most part, these signals have been pretty good over the last month. Now, I did mention that there was one similar to the situation that we had right here. Here it is. We had the signal here, then we had some economic news come out. It reverses higher, we get another signal, and then that signal materializes and it's a profitable trade. So the market the market wants to correct itself when it moves out of alignment. Just sometimes you have to understand that these fundamental occurrences will happen. And it's very important to continue to, that we continue to look at the economic calendar to kind of see, when major economic news is going to occur. And then the one prior to that was right here. So this was the last month. We can look at the actual cross pair itself and kind of look at these exact same trades for the most part, and kind of see, yes, they agree with the synthetic version of it. So looking over the last month or so. So from a technical standpoint, it looks like the euro pound is still trying to figure out its next move. Currently, it is bouncing off of this support that was created last week, and it looks like there's some initial resistance at around the 0.8565 area, support around this 0.8540 area. And if the euro pound does move below this point, then it would expose this old resistance point at the 0.85 level. So just looking at the crosspair and the synthetic crosspair, currently it looks as if the euro wants to move higher, but it is facing some upward pressure statistically. So let's look at one more thing. Let's look at correlation to kind of see where we're at with that. Gives us an idea of just how out of alignment these two pairs are. So alright, yep. Right now, correlation between these two is 0.17, and typically the euro and the pound are very positively correlated, most of the time greater than 0.7. So given that correlation between these two instruments is at 0.17, a correction is coming. And so we just have to, just see how the economic calendar plays out for this week, and how the euro reacts against the pound. So that's it. Thank you.